Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Tuesday, December 30th, and my name is Raleigh White, and I'm coming to you live from a beautiful, sunny, but cold day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be recovering a range of important topics with a continuing focus on trading small cap stocks, including the advantages of trading small cap stocks versus large cap stocks. He's going to talk about possible price gains when trading small cap stocks. He's also going to share how small cap stocks trade on a level playing field and what the typical window for trading small cap stocks is. Now, he's also going to share with you the importance of confirmation signals when to possibly avoid using these signals. And as a special bonus, he's going to give us today's top stock picks, and he's going to do a major sector analysis for us. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, please keep to the topic. Also, no political discussions allowed whatsoever. And also, please keep side conversations between you and someone else to a minimum so that the rest of us can focus on the education and the information that Roger is sharing. Because after all, he's spending time with us this afternoon to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock for Roger's morning show, you'll note that there were several catalysts on tap that we needed to be aware of. In the mags, we noted that Tesla was up 1% coming into the open. On the gold front, we saw that NEM, Newmont Mining, and FCX were both up 1%. Something else we needed to mention was that energy sector, because crude oil prices are up and they are driving energy stocks. Also, on the Fed front, we know that we have FOMC minutes that are coming out this afternoon. So these are the things that we needed to be aware of. And for those of you that are wondering why we report on catalysts, from Roger's perspective, any information that is either known or will be known during today's trading session, but is not yet priced into the market, that is a catalyst we need to be aware of. It's a volatility flashpoint, and we just need to be aware of these things as we potentially, consider taking trades, for example, in the Magnificent Seven or gold or energy or whatnot. As far as Roger's pre-market stock watch list is concerned, he shared 16 tickers with us today. On the short side, you can see that we had SOUN, SMMR, Lucid, Coin, BBY, DKS, GRRR. I like that. GRR. Must be a pirate stock. And BYRN. On the long side, ACGL, Micron, CRM, FTV, ANF, AEO, DAN, and CB. Now, these are legitimate stocks on his watch list. And what that means is that these are stocks that have the potential to set up for being a trade that he might consider today. And if he does consider one of those, more than likely what he's going to do is he'll post that trade in his trading pit or in a number, any one of his other premium alert services. And I expect he's going to give us an update on this list when he joins us in a few minutes. Now, as far as Roger's closing comments were concerned, well, when we came into the morning show, we noted that the futures markets were all pretty much flat, and I like Roger's term, and random into the open. There just really wasn't anything driving them. They were particularly flat. There was also no real tailwind coming from the European and the Asian markets. They were mixed, but nothing to give us, any kind of impetus coming into our open. We all noted that the major indexes continue to be stalled right at their resistant levels and on very low volume. He also shared with us that the put to call ratio was balanced, maybe slightly starting to favor some puts, and he also noted that there is just very little to no momentum. As a matter of fact, the number of stocks making 90-day highs was, I think, 30 stocks. The number of stocks making 90 days lows was 30. So complete balance, nothing there to indicate that there's momentum in the market. And as he shared with us, when you see that kind of balance, how can you expect there to be any move in the indexes? Because it's stocks that are going to move the indexes, and with everything sort of being in balance, there's nothing really much to drive the market. He also pointed out that the bonds do remain low in their range, and this is always a concern for Roger, and particularly when we've got stocks and the index is trading, the index is trading near all-time highs, but the bonds continue to be somewhat of a dead weight on all that. He also pointed out that the VIX is near the bottom of its range, and since this is something that tends to revert to the mean, it's just something to keep an eye on. Bottom line, folks, his recommendation, just chill. Just totally relax today. There's nothing much going on. We are in the middle of a holiday week. There's very, very low volume. All the institutions essentially are on vacation. So, as we found out when we were talking to Kane last week, the only people that are basically driving pricing now would be the algorithmic trading bots, okay, that are just hunting to mess with you. And, any institutions that are open, they have their junior members, on available, and they're not given much leeway whatsoever to trade any volume. So once again, holiday week chill, just be extremely careful. Also, just want to point out that as you all are coming in today, we really do have a terrific agenda. This is kind of a follow-on to yesterday's session where we're going to have a continuing focus on trading small caps. And particularly, Roger is going to share the advantages of trading small versus large cap stocks. He's going to talk to us about the potential price gains that you get when you're trading small cap stocks. He's also going to share how small cap stocks trade on a level playing field. And he's going to share what's the typical window for trading these small cap stocks. And we know that confirmation signals are important, and he's going to talk about when to use them and, interestingly enough, when to consider avoid using them. And as a special bonus, he's going to talk about today's top stocks, and as he said this morning, he wants to go ahead and do a major sector analysis live in front of us. In other words, bring up the sector charts and talk about what's going on. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, folks, remember that the chat is open to everyone. And remember, we have ground rules. Always be kind and supportive in your posts. Number 2, please keep to the topic. Number 3, no political discussions allowed whatsoever. Also, folks, keep side conversations between yourselves to a minimum so it doesn't interfere with the rest of us. And what we're looking to do is to focus on the education and the information that Roger is sharing, because after all, he's taking time out of a very busy day to give us an edge in the market and to help us all become much more confident and consistent in our trading. And with that, folks, let's say hi to the team. We've got Matt here with us. Hey there, Matt. How are you today, buddy?
How are you?
I'm doing good. I'm doing good. It's a slow day, isn't it? It's kind of like a watching paint dry kind of day.
Yeah. We're still, we're doing one. We're still pretty active. We got a couple of things in the oven. Nothing crazy, nothing too much. We took a half a position in the high flyers. We got stopped out, and then the position went crazy up. I hate when that happens. I hate when that happens.
We've all been there.
Oh, I hate when that happens. But it was only half a position, which was good.
Yeah.
I didn't want to. Again, I'm trying to do everything possible not to trade right now, and not to be aggressive. Because this is the time of year when people are slowing down, and there's just not a lot of momentum. So I'm trying to be really, really slow. But no. So anyway, we'll get into all of that. We'll get into all of that during the Q&A session when I explain everything to you guys. But for now, just wanted to say hello and thank you for being here. Let me just share my screen so I could show you some here. Let me go to screen 5. Just want to show you kind of what the market action is doing right now. So right now, we actually have a very interesting setup right now. We have bold. The only problem is it's holiday. There's not a lot of volume. That's the only problem. But volume is moving straight up into stocks right now. We're moving straight into stocks, and the S&P is diverging. Now, look at what happened last time. Look, going straight up all day, right? Look at what happened when the S&P diverged earlier today,
Mm.
right? Came right back up. And we're seeing that again. So if I know anything about the markets, I'm expecting the SPY to start coming back up uh, and starting to kiss the Vold. Again,
Yep.
the only exception is, and it's a big one, it's the holidays. And we can't trust a lot of these tools
Yeah, you've
because they're
mentioned
not,
that several times, Roger.
yes.
Typically, they need volume to work at peak efficiency.
Yes, everything needs volume to work and at peak efficiency. This is why that will, yeah, yeah. I should, you know what I should do? I should have just closed the trading for this week and called it a day. And I don't mind taking, I don't mind losing money on trades, but I hate losing money on trades that end up getting stopped out and going like really exploding. You know?
Yes, I know.
I,
And I know, Roger, you've also shared with us one of
uh,
the biggest trades you regretted was during the holiday session.
yes,
Yes, and you
exactly,
were like,
exactly. It
I've learned
works
my
both
lesson.
ways.
Yes, it does.
It works both ways. There's no, you know, it and that's why we have to remind ourselves we have to follow our rules and we have to just look at every trade after 100 trades and not after every uh because if we take our pulse after every trade, we're going to be suckered into randomness, emotions and all that other stuff, and we don't want to do that. We want to be focused, grounded and be ready for what's to come, okay? All right. So let's start off with the broad market. So anyway, I kind of started off here, so I might as well continue. We are right now, believe it or not, the 5 day value area right now on the SPY, the
Oh,
5 day value area is at 687.83. It's just a hair above us right now. See these areas right? See this area right here? We're right in the middle. This is where it is. You could see it kind of cross here. This is really where the volume is. Now, with the fact that there is no volume today, usually you have a reversion market, and that means we should be just kind of playing around this area, kind of like we've been the last few days. See that? We've been going above, and as soon as we get above this area, what happens? We sell off. That's because there's just not a lot of volume right now. There's just not a lot of volume right now in the market. And there's
right.
unfortunately very little we could do about it till till we get out of this holiday season. And quite honestly, and again, I probably shouldn't say this because it's going to discourage all of you, but I'm going to be honest with you. It really doesn't start till the second week in January. Okay. Notice when I first started trading, the 5th or the 6th of January, it wasn't the 2nd of January. It was the 5th or 6th of January. Even back then, I had it right. It wasn't on purpose. It just happened that way. But the reason is most institutional traders, and that's what mostly issues these large caps or engages with these large caps, they're largely off for the holidays, and they like to take their holidays, and they don't like to make big bets till well into the second week of the year. I'm telling you, that's when volume usually comes back.
Mhm.
Okay, just very common, very common occurrence. Let me just check something here. I want to make sure everything went out.
Yeah, I did. I sent them.
Okay, you sent it to all the rooms. Okay, all right, excellent. Thank you, sir. Yeah, the divergence on the SPY is something else right now. Look at this. All right. The ADD is flat as a pancake. So this also confirms that we're in a very choppy market. You could see right here, we're at 59, which is even. So based on everything I'm seeing here, I'm not really expecting too much upside or downside to the market. What I can tell you is that tick lows are getting higher as the day continues, which is actually positive for the market. It's not negative for the market, it's positive for the market. And VIX isn't really, I mean, look, it's, you know, it's near a very low area right now. Bonds are also not really doing very much. So again, I'm not expecting a lot from the market today at all. I do like this quite a bit. Now, one of the things that I showed you this morning, and I will show you this again right now, is the fact that we only have 36 stocks making 90-day highs. and we only have 30 stocks making 90-day lows.
Yeah, pretty balanced.
Yeah. Yeah. So there's some really nice looking stocks here that are moving higher, and I really like that. Like Micron a lot around here. Anyways, but there's just not much there. There's just not much there. There's really not going to be any surprises from the Fed, Sean. It's not gonna happen. I'm not seeing it at all. Okay. Let's talk SPY real quick, and then I'll get into the broad market. Let's answer some questions. Yeah, me too, Cyrus. By the way, looking at our levels, our intraday levels, that's our low, which we hit pretty well. Look at this, Matt. Are you seeing the levels from this morning?
Mm-hmm.
Look at this. Pretty good. So I think we're going to get stuck. I think we're going to get stuck somewhere here. I'm not expecting major surprises. What I do like is the fact that we bounced off the 8-day EMA just like we did yesterday. And what I would love to see, so far we have an inside day, which again is not very surprising. What I'd like to see is this bar close somewhere higher above this bar right here. That would signify to me that momentum is at least shifting to the upside. Okay? Something very, very significant you need to pay attention to. All right. Looking at mags. Mags are at the 50-day moving average. There's a lot of support here, but I don't like the fact that they're at the 50-day moving average. That's not, we want to see mags leading. This is the biggest source of money coming into Wall Street, and right now it's at the 50-day. That's not a very good sign. Not a very good sign at all. I don't like that. I really want to see it start coming up aggressively. QQQ, on the other hand, is still holding on to the 8-day fairly well. Respecting these lines, okay. Not too bad. Need to see a bottoming here and a directional backup. Our algos running at lower levels now intentionally. They're right. Remember, algos feed off instant retail traders. That's what they feed off. Okay. So the less retail traders are there. It's like a game of Pac-Man. Imagine algo being the Pac-Man, and those, what are those things called that they have to eat? What does the Pac-Man eat up? I don't know. Whatever those little dots or whatever the dots. Yeah, the dots. The less dots, the more the Pac-Man will be running around, not really doing very much. So just keep an eye on that. That's very, very, very important. Okay. Very, very important. The ghosts, yeah, whatever the heck they are. So there's not a lot of ghosts running around. So if there's not a lot of ghosts running around, they're going to be limited. Remember, they choose the path of least resistance. And that's a very good question, actually. So very dull market. Absolutely no power pellets. Yeah, whatever they are. There's no momentum right now. We have a lot of listlessness. Now, I did promise to go over the sectors with you, and I'll do that right now. I want to be really, really thorough with you guys. Really, really thorough with you guys. Okay. Where's my stock fetcher? There it is. There's my stock fetcher. All of these stock, by the way, all of these filters that I use, the 90 day high, 90 day low, they're in the VIP room members area. And if you go to Cam and Gustavo, they'll give them to you. They're all there. They're all around. They've been there for years. And as I mentioned before, there's very little momentum. Now, let's look at sectors. That's what I promised to go over today. Okay. You could see that you got communication, energy, semiconductors, but interest rate sensitivities over here. We need them all to be over here in order, okay? All right. Look. Okay. Let's look at the charts, and we'll look at all of these, okay? Okay. Actually, it's easier for me to just pull them up on, let me just pull them up on my chart here. Easier for me to do that. Okay, XLE. What is XLE doing? Go to the daily. This is the daily right here. All right. We're above the 50-day moving average. We're very choppy. We don't have a lot of kind of in a channel, if you will, pretty much right here. Not much going on. Not much going on. And I'm not expecting a lot to go on. And notice we've been in this channel. We've been just channeling here since September. Absolutely no action on the energy at all whatsoever. Okay. All right. Next sector. It's very not a lot of directional bias. Basically caught in a channel. Okay. Next one is XLC. I'll just put this on my left so I can. XLC. All right, XLC is looking really good. We have a nice V configuration here. My concern is for next year, I'm not expecting a lot from it. But right here, we need to break above this area. Price action's not bad. We're above all the major indices. My concern is we haven't been able to take out the high, and the high was made all the way middle of September. That's a major, major issue. Major, 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 major issue right there. Okay? Major issue. We really need to get above this area. This needs to become support. Okay? Next major sector. But it's not looking bad. You know? Look at the last few months. Not bad, right? But if you zoom out, it's got to get above this area. Overall, it'd be nice if it would, because it would continue this trend. This is kind of like a little detour it's taking, but it looks like we're on the fairy tale end of it right now, which is great. Okay, next one, my favorite sector, SMH. This is my favorite sector for 2026. It did take out the high. The high is right here, not here. Very important. I know you guys are like Rogers making a big deal out of it. Who cares? The high here or here? No, it matters. It matters because that means there was enough momentum. There was enough momentum to take us to a new high, all the way from down here on high volume. It's a big, big demand zone right here, and yeah, so that's really, really great. That's really, really great. And we have higher lows. We're above the 50. I like what I'm seeing here. And I'm confident here. As long as we get above this area right here. If we can get above this area here, which is what? 368.50. This candle right here. We got a nice upside move right there. A very nice upside move. You too, Aloha. 260 for two Pink Sparkles. You're in a different part of the. You need to go into the time machine and adjust the settings. I said 260. I said nothing will happen till we go above 265. Once we went above 265, we went to 365, and nothing happened till we went above 265. And I think everybody remembers that because we needed to get a T-shirt, right? Remember 265?
265. Yep.
Yeah, you're all the way. Yes. You need a time machine. You're stuck in last year, right here. And what happened when we broke 265? 100 points is what happened. You need to. We're now a year later. Yeah. Let's continue. Time machine killing.
I hate these distractions, Roger.
Yeah.
Seriously.
Yeah. Let's move on.
Come on, folks.
Yeah. XLRE. XLRE is not looking great. And again, with the bond market doing this, notice something interesting, something I just noticed. When did TLT peak out? Around end of October, and looks XLRE. Isn't that interesting? So TLT, let's see, 28th of October, between 21st and 24th of October, and XLRE 24th. Do you guys think that's a coincidence? Do you think that's a coincidence? No. No. Interest rates, real estate. Look. See that? Okay. And if there are any questions, I'll come back to them when I'm done with this segment, and we will answer all of them.
Yeah, that'd be good, Raj. Yep.
XLU, utilities. Utilities look like they're in a downtrend, if you ask me. See that? And to me, that looks like the top upper part of that channel, and it looks like it wants to come right back down. Kind of like it did right here, right there, and right here. Okay? Yeah, so utilities don't look all that great to me. Let me just really divert and go to volume. I want to see what volume is right now. We're right now at 18 million. Matt, I wouldn't put too much faith in the Volt today as a result, because volume is very low. Okay, we're already halfway done with the day, and volume is half of what it should. Volume right now should be between 40 and 50 million. Anyway, okay, coming back to us. See how it even here when it broke away for 2-3 days, it came back and then it came right back down. Okay, so be careful. Be careful there. Okay, be cautious there. All right, next one is technology. Technology. See that? That's a symmetrical triangle. Symmetrical triangles are a wild card. They can break either way. Now, I would like to think, because the lows, excuse me, are getting higher here. I'd like to think that once we get past this area right here, we'll go higher, because we have an ascending triangle here as well. So this is why it's important to make an all-time high really soon, or take out this level, because till we do, we have a problem. Okay? Okay. All right. Let's continue. But so we are right at the 50-day. We're literally right at the 50-day. We're still above the flag, but I would just be very cautious here. I would love to see us break above 147.73. And you know what? You guys want me to give you a level for SMH? That level is right here. I gave you that level right here. It's 360. It's 369. 369.
And is that the level for 2026, Roger?
Yeah, that's the level we need to break. Yeah. Oh, yeah.
Yeah.
Well, we need to break this level. Yeah, we need to.
Yep.
This is the highest high volume candle we have in 2025.
Yeah.
The latest one. So unless something miraculously happens tomorrow, yes, that's going to be the level. And by the way, just FYI, we have a very nice, very, very nice ascending triangle right there. Okay? Really nice ascending triangle right there. Okay? And by the way, this is not a replay. This is live. This is live. So now, folks, if you can't now, and again, I'm not trying to hurt anybody's feelings. I'm not trying to, I don't want people to take this the wrong way. I'm trying to help you. I really am trying to help you. But if you can't identify triangle patterns like this, or the one I just showed you, like the if you can't identify these simple patterns, higher lows, the 50-day moving, where the 50-day and the 8-day is, triangles, head double tops, and I'm not talking about like complex. I'm not talking about countdown to Elliott wave legs that you need like to go through. I'm not joking. I've told you those stories. You need to go to an institution for that. You need to go to a school for that. Okay, you really do need to go to a school for that. Okay. I'm not kidding. You like I've met a woman who's like, yeah, I'm learning now. I'm getting my degree next year. I can calculate. They can't make any money, but they can calculate these legs really well. I don't get me started. But anyways, you need to just be able to do real simple triangles, support and resistance areas, real simple stuff like that. Start training your eyes. The more charts you look at, the easier it will become. After a while, they will start just popping up at you. Okay. Okay. Just FYI. Yeah, right on my birthday, Sean, October 29th. Okay. So let's now move on. Bitcoin. It is an index now. Oh boy. Doesn't this look like a boot? Doesn't it look like a boot? We should call this the boot pattern. This is where you put your foot, and this is the shoe part, right? Looks like a boot, right? Like an Italian boot, like Italy.
Or a high heel potentially.
High heel potential. Yes,
Yeah.
yes, exactly. You're seeing exactly what I'm seeing, right?
Mhm.
I'm gonna patent this, Raleigh. Call it the boot. No, just kidding. What it is it's a flag, right? This is going down. And this is exactly what I'm talking about. You have a flag pattern. This is a flag. It's an upside down flag, but that's a flag pattern. And flag patterns are bearish patterns. If it was a bullish flag, it would be a bullish pattern. So yeah, this is Bitcoin ETF. We could look at IBIT, but it will do exactly the same thing. Technically, you are correct, Phil, but it's a boot. It's an Italian high heel boot. Gucci.
It's a Gucci boot.
Gucci boot. Yeah, Gucci boot. There you go. I have too much fun with you guys. Anyway, it's just an inverted flag. But my point is not that it's an inverted flag. You guys need to start start, paying attention to these things. And recognizing that we're below the American flag, red, white, and blue. And if this thing breaks, you got to break down here, and you got to start watching at things like this. This is really, I'm glad I'm doing this because I'm kind of showing you where all these indexes are. But on the other hand, what I'm doing is I'm actually teaching you some basic technical analysis, which I absolutely love to do. Curses, I missed it. I got an alert on it 10 minutes ago and I missed it. Hold on one second. If you guys want a bonus trade, here, I'll give you a bonus trade, okay? How come there's no options? What's going on here? My options not working? Oh, there they are. Go 3 days out. Giving you guys a bonus, okay? I go right here. Go to the 25, either 26 or 25 call. Put right here. And look for some upside, okay? It's a day trade. If you don't get anything in the next hour and a half, you just get out of the trade, okay? Right here. There's your sweet spot. Don't say I never give you bonuses, okay? Gave you a red meat. Red meat right there. This is on ticker symbol NNE. I just gave you guys it looks just like BBY did yesterday or 2 days ago. See that? NNE. And as I mentioned, 3 days to go, 25 or 26 put. If nothing happens next couple hours, you just get out looking for about 20-25% on the option. You're welcome. It's a lottery trade. This is not like it's a lottery trade. It's a lottery. The word lottery should say I think the word lottery is pretty self-explanatory, Raleigh, right?
I think so. Yep.
Right? Lottery. Okay. I shouldn't have to explain what it is. I think people understand. It means don't put your life savings in a lottery trade. Lottery trade. Okay. XLP. This is consumer staples. Now I'm going to tell you something really odd, folks. Usually consumer staples do a lot better than they've done this year. I mean, look at this thing. I mean, this has been like the most painful year for consumer staples, right? They're doing nothing. I mean, if people were to ask me, Roger, what do you think this is going to do? I would probably sit there and say, I have absolutely no idea. I really don't. Look, it's between the 50. It's between the 50 and the 200. The 200 is acting as really good support. It's inside the American flag. I honestly just don't. I don't know. Nothing. I mean, I don't have any opinion on it. I have no opinion on it, which means if you're going to be trading stocks in this sector, and we do trade a lot of stocks in this sectors, we want to look at extremes, extreme highs, extreme lows. A good example is that stock NNE I gave you right now. If you were to see a consumer stock doing this, that's kind of what you want to see. Okay. Okay. Folks, I'm trying hard to teach you, to help you, and to even help you make money sometimes, but there's no guarantees in the market, especially during the holidays. Okay, XLB. Now this actually looks very interesting. This is something that I wasn't expecting, but this is nice. Now the chart is very choppy, but with that said, if we can get past this area, and we're very close to that area, there's a good chance we can break out on basic materials, which is actually a pretty bullish sign for the market. Okay? Because you got a lot of commodities, a lot of natural resources. By the way, the SPY is crossing the VWAP right now to the upside. It's a pretty bullish move. Bullish in a range-bound, choppy, crappy market. So take that with a grain of salt too.
Maybe third time's a charm. Maybe we'll get over.
Oh, to the high?
We've come up there twice. Same level, bounced.
Yeah, that would be great. That would be great. Again, there's nothing going on. It's just algos messing around. This is exactly what I was talking about, just going up, down. Okay. All right. All right, right there. Right there. Right there. Not bad. Not bad at all. Reminds me of XLC. Reminds me of XLC. Let's continue. Man, I'm having a good time with this. This is very nice. Okay, XLV. XLV. This is the healthcare sector. Now, the health sector has been on fire this year. The problem is when it went up to the September level, which is right here, it stalled and it can't get above it. Okay. Now, I still believe because it's been moving really well, I think we are going to get through it, but I think we need to get past this first. And this is a major resistance area. I'm going to put it right there. It's also a high volume candle. So there's a lot of liquidity. There's a lot of movement. This needs to break and confirm. And so far, I have not seen that yet. Okay. So very, very important. Very, very, very important. Okay. Okay. So no soup till we get above 150, 159, say, okay? Just call it 159. You guys should be taking notes. I hope you guys are taking notes. All right, XLI. Now, this is a really good example. What kind of pattern is this? Can anybody tell? Before I give it away, can anybody tell? Now, I know if Richie was here, he would tell me in a second what pattern this is. He knows exactly what pattern this is. It ain't an A line. It's not an A line. Can anybody tell me what pattern this is? It's called a megaphone. The boot. You guys cracked me up. You guys cracked me up. Now, again, I could see that within half a second at looking at this chart. Can you throw away those damn indicators? Throw them in the garbage can. I'm serious. I'm serious. Throw them away if you can't see that. Okay? You guys cracked me up. Cracked me up. All right. Now, I don't know if you guys noticed or not, but the industrials made a swing high just recently. That's a very bullish sign. That's a bullish, very bullish sign. Industrials making swing highs, basic materials making swing highs or near all-time highs. That's very good. How about financials? Look at this. It really, Raleigh, really looks like AI is taking a back seat to old-fashioned blue chips, doesn't it?
Old-fashioned blue chips at this point. Yep.
They just need to cool off a little bit. They'll get on fire again. We're already at all-time highs or near all-time highs. This is the area you want to watch really closely right here. Okay? This is the area you should be right here. Right here. Because it's either going to be support and it's going to bounce and come up, or it's going to break down. I can't make my chart area larger. Oh, actually, I can. I could do that. Yeah, I can. Yeah, I can. Sorry about that. I can, David. There you go.
And Roger, before we move too far from that, a lot of people are going like, okay, I see the megaphone, but what does that mean? What does a megaphone pattern mean?
Oh, megaphones means that those areas keep increasing, which means we're expecting higher volatility and more
Okay.
range.
All right.
But that's actually a good. What that's telling us is that we need to get to this area. We have resistance right here at this area. That's what this means, and that would make a higher high, and that's pretty good. Now, usually these megaphones, once they develop after usually when they have like 2 touches on each side, they're done. They're done. So they don't just continue developing.
Yeah, it doesn't continue on to infinity.
Right,
Yep.
right. But what they do is they give us a really good profit target area or a resistance area on both sides. That's what they do. They're not very popular because they're not entry indicators. They're more used for profit targets and resistance levels.
Mm-hmm.
Okay.
Okay, good. Thanks.
Yeah, of course. That's what I'm here for. XLF financials. We're here. There's nothing here. There's nothing to stop us from going higher. We need to worry about what happens here at 54.46, 54.50. Okay, that's the area we need to worry about. But I'm going to tell you guys, the fact that financials are making all-time highs before New Year's is one of the best things that can happen for the stock market. Okay, one of the best things that can happen for the stock market. That's right, D. That's exactly right. Okay, XHB. Okay, XHB, we have a nice little downtrend. Well, I don't know if you guys could see it or not, but got a nice little downtrend here and a nice little downtrend here. Oops. Little downtrend here as well. Nice little pocket. Again, interest rates. What date was it? Interest rates. I think we're going to stay in this range, stay in this channel, and if we break, we'll come down to this channel right here. So we got a couple of channels here. I mean, obviously this isn't perfect, but you can kind of see where we're at. We're just kind of going through these channels. Okay. Actually retail XRT. Now this is a very important sector, and thank God we made a higher high here. We made a higher high here. That's really important. And honestly, I know I'm being nitpicky, and what's really stopping us from seeing a strong rally is semiconductors and technology stocks because of interest rates and because of this AI mega cap slowdown. But if you look at retail, the fact that retail made an all-time high, that it was able to come from 200-day moving average, that's a very, very powerful sign. Very powerful sign. Okay? Very, very powerful sign. I like that quite a bit. Okay? So look at XLF and XRT. Very powerful sign. Okay. Sorry about that. Okay. Let's continue. Let's continue. Let's continue. Next one is XLY. It made a swing high with retail. That's really good. Really, really good. But I'd love to see a little higher. Now we need a pullback. So actually, to be honest with you, I like the non-tech sectors more than the tech sectors. And that's the first time I've said that in a while. I think we're going to start the year off on an okay note. I don't think it's going to be a crazy up move. I think it's going to be I think we're going to be very cautious beginning of this year. And the reason for that is the bond market. I think the bond market needs to break above this 88.60 level for us to see more upside momentum. I really do. Okay. And if you look at Russell 2000 that recently made a swing high, that's telling us that there is a lot of anticipation that the bond market is going to revert back higher. Okay. And I usually look about 4 to 6 months back when I look at daily data. That's what I look at. Okay. Now, I promised you yesterday, because you guys really, really liked it. I promised you yesterday that today I would go through the confirmation patterns. So I'll do it again for you guys. All right. I'll do it again. I know a lot of you guys were really focused on that. So let me take Matt, can you open the door a little bit? It's getting a little warm in here.
Yeah.
I think the building turned the heater on.
Yeah, Roger, we had so many comments about that, and people are wondering when you're going to formalize that. Where is it going to be a PDF document? Some people said, put it on a mouse pad.
I may
But the thing
do
is
that.
this is it's all there, guys. All you have to do is watch the replay yesterday or watch the replay today. And
And yeah, I'm gonna actually, I still have to put it together and create it, and it's gonna be for the folks who are in the High Flyers Club. But let me just show you what this is, so you guys understand what this is, okay, and the importance of this. Thank you, sir. Anytime, and if you think, so let me just take a screenshot here. Anytime, and this is here. This is support. This is resistance. Okay. I'm going to use this example on resistance because most of you guys are long side traders. You're not short-term traders. Okay. All right. So I'm going to give you the long. If we were trading to the short side, it would be exactly the opposite, and we would be talking about this line here. So you see this line? That's your resistance line. Now, I'm going to explain this to you again, so in case you guys didn't understand this. This could be the morning levels that I give you. This could be the VWAP when we're trading, day trading. This could be the anchored VWAP when we're swing trading. This could be the 8-day EMA. So whatever lines you use, pretend it's that line, okay? This applies to every resistance level. What most folks don't realize is that how price... See, this is what you're taught. Oh, this is resistance, and resistance becomes support when price penetrates this level. But what they didn't tell you is, how did we get here? How did we get here? How did we get here? How we got here determines what you do once you get to this level, you see? And that's the part that they forget to conveniently tell you in the book. Okay? How you get here is changes the story completely. For example, let me give you an example. Did you bolt here from here? Did you just bolt here? Or did you come here and you've been sitting here for 20 minutes? Now, if you think there's no difference between how we got here, then you're not thinking straight. Think about this. The stock or whatever you're looking at ran up all the way here. How much energy does it have left? Versus a stock that ran up, didn't touch this area, but is sitting right here and then went up here. It's a big, big difference. Big, big difference. How about when this is not this narrow? How about when it's this deep? This deep. You trade it the same way? Do you trade it? What about when you go here and it just continues going straight up and gets stronger and stronger? Do you just buy? See what I'm saying? There's different conditions. So what I was able to find is how you get here to how you get from this side of the fence to this side of the fence will determine what happens when you're up here. Okay? So imagine this. This is a party, okay? This is a party. This is you get. Let me delete all this crap. Look. Imagine you're single. I'm going to use my singles methodology. This is party, okay? This is prep. You're prepping for a party to go to a party, okay? How you prep determines if you get how much you prep for the party determines if you meet somebody and you get lucky and the party. You understand? There's 5 ways price can move from here to here. And that's what I'm going to show you right now, okay? How did I do this? I looked at about 500 to 1,000 setups that failed and about 500 to 1,000 setups that worked out. There's your line in the sand, okay? There's no stopping us now. Okay. So the first is how did you get here? Well, you're just consolidating here. The market's about to open and you're just consolidating in a regular nice old flag, okay? In a nice old-fashioned flag. You're consolidating right here, okay? You pop, okay? You pop. That's your initial buy. You wait at least 5 minutes right here, at least 5 minutes for another pop up above this area right here. Okay? At least 5 to 15 minutes. That's your confirmation right there. Okay, now, next one. That's just a simple early stage uptrend pullback. So you go up, whoop, and then you come down, but you don't really break this area too much. And your stop loss for this is right here. Okay. All right. Number two. And there's only 5. And once you learn them, that's it. There's only 5. You don't have to, there's no encyclopedia. Okay. This is, by the way, very simple Wyckoff trading principles. This isn't anything crazy here. Okay. So what happens if we just ran up here? We ran up here, okay? Ding! And popped our head through. So the first one, we flagged, then popped our head through, right? So we wait, and we go above there. So now it's a different situation, okay? Now the situation is we ran up here, woo! We just popped right through, and then we started just sitting here, consolidating, up, down, up, down. Give it 15 minutes. Roughly 15 minutes. Wait for it to break this area. That's your confirmation right there. Stop loss right there. Okay. Late stage uptrend. Okay. Late stage. Okay. You like the sound effects? Good. Wait till my sound machine comes out. All right, let's continue. Here's the third one. You're by the time you look at the chart, you're already here. Your stop might have gotten hit too, by the way. Your entry stop might have gotten here, but now it just comes back down all the way. All right, all the way. But it doesn't break. It doesn't break. It just comes right here and it consolidates. Oh, Jesus. And it consolidates around here. Just consolidates around here, right? Wait for it to break. You wait for it to touch this area at least twice. Two touches. So you want to see 1, 2. Third one, you go long. 15 minutes. Okay? That's a strong breakout pullback. Okay? Confirmation. The next one is, I'm going to show you them together. It's the same entry. The problem here is, see how it never really went below this level? Just kind of flirted with this level. This is a shakeout fake out, or a breakout fake out, breakdown fake out. So it breaks you down and it now comes down here and you think you're going to get stopped out. But then, why does it do this? But then it comes back up here. That's not good enough. You want to wait for it to confirm, and then come back up. You understand? That's what you want to see, like this. So you want to make sure that it confirms. It confirms up here. Okay? So the difference between these two is it's a runaway rally. It's a runaway rally, but this runaway rally doesn't really go and break below the line too much, right? And this one really comes down. Okay? So you would wait for it to come back up here, give you a confirmation, then touch this area, and then come back up like that. Okay? All right. And the next one is, delete this. It's a variation of the first one. So here's your line, right? Here's our line. I'm a sloppy Picasso today. Okay, so there's your line right there, right? Okay. So you remember how we were flagging right by it? We're just kind of like sitting right here, ready to break. This is different. This is like this. It's just doing this. And then finally it breaks. Okay? Finally it breaks. Okay? You don't have to wait for anything because it's been consolidating for so long. You can go on the initial breakout right here. Problem is your stop loss is going to be below all of this. And so you got to give yourself some room. Okay? I'm going to go through them once again really quickly. Okay? No, you're not going to see this anywhere else.
And so, Roger, one of the
Yes.
questions that came up from several people, can this be used across a number of different time frames, or is this specific for like 1-minute charts? Or
For our purposes, we're going to be using 1-minute charts to isolate this.
okay.
Okay? 1-minute charts, because we're looking at small cap, we're day trading small cap stocks. You could
Good
use
point.
this on any time frame you want. These are general market principles. Okay? So you're flagging around. You're just flagging around here. Okay? Just flag. This is the best type of setup. This is the best type of setup when you go up here and you're just flagging here. This is the pre-market high and you're just flagging here. Okay? And then you break up. Okay? You build a little consolidation. You put your stop loss under this consolidation. You wait for a breakout right there.
And so those are 2 entry points.
Well, it would be what would
Could
happen
be.
is that what would happen
Yeah.
is this. Yeah, if you would get a portion in right here. Yeah. And then so what happened today was we got our portion in right here. but we got stopped out before we got the second part of it.
Ah, yes.
That's what happened. It went up really nicely too. Went up like, I think it went up like $2 or $3. It went up really like it would have been a big, but it's a numbers game. It's, after 100 we re-examine things. So again, that's the first one. Just a flag. You have a little tight flag here. You get your whoop, you get your pop, right? And you don't set your stop till you're all in on the trade, really, because here use a wide 1-to-1 or whatnot, just because you want to give it a little room because you want to get confirmation. But once you get confirmation, you're good on the trade. That's the first one. The second one, really, really straightforward. Runs up, boom, pokes you right here, and then just doesn't do anything. It just goes to sleep and annoys everybody. The second one would be above this level right here. And if it and your low here would be your stop loss, okay? That's the second one, the one where, and this happens all the time. It runs, because here's what happens. At 5 o'clock in the morning, it starts going up, right? Oh, here, I'll give you the scenario so you'll see what I'm talking about. So at 9 o'clock at night, it does this. 9 o'clock at night, it does this. Oh, God, why is this so difficult? Okay. It does this at 9 o'clock at night. And then for the rest of the night, it just sits right here. Here's your overnight high. It's just sitting right here and consolidating. That's usually how that happens. Those are really strong because it needs a lot of volume to stay in this area in this tight range. Then you have your breakout. You can either go in or just wait for confirmation. And then it'll consolidate here some more. That's your stop loss. And then the second breakout is your long. Okay? That's usually how that happens. Your second one, boom, dings you right away. Consolidates here, comes back. That's when you buy the second round. You put your stop loss right here. Third one is comes up. Woo! And you get hit immediately, or you get hit on your partial right here, and you're like, whoa, I'm in a good profit here. I'm just going to take profit or wait. And then it goes, woo, what's going on? But it doesn't go too far below this area. It consolidates around here. It consolidates, goes lower. Then you want it to go up, touch it again, and then you go long on that. You want to have two touches. 1, 2. That's it. 2 touches. The second one is same scenario. Whoa, wow, oh my God. Oh, I should have locked in my profit. I'm still at a profit. Oh shit, I'm breaking even. Oh, I'm losing money. Oh, I'm losing money. Oh, no, I'm coming back. I'm breaking even. Oh, it's finding support. Oh, it's finding second support. That's when you go long. Understand? You want it to find some support here, and then your stop loss is right here. And then you tighten up your stop right here. So we play hard and loose with the first trade, and then we get really, really tight with the confirmation, okay? And then the fourth one is, the fifth one is just when it does this all night long. It's just doing all that, like a deep consolidation. You just wait for the first breakout, because that usually means it's a good it means, in other words, it hasn't triggered yet. You just go with your first trigger right here, because if it can consolidate for say 15-20 minutes and then break out, that's a very good breakout. Okay? And as I mentioned before, I've looked at about 1,000 to 2,000 charts. I'm not kidding, to find everything a stock does after it enters and after it doesn't, after it gets stopped out. And I asked myself, what can we do to prevent it from being stopped out? How could I have gotten an extra confirmation? And when I was doing that, I realized that most of the time you're dealing with these 5 patterns. It'll come tease you and not break out, and then break out later. It'll come right to your entry, do this to you, nah, 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 and then come back down. I mean, it only does 5 things. And if you can identify how to deal with those 5 things, you're good to go. And again, tomorrow when we have our session, I'll talk more about these patterns, how to use these patterns, when we use these patterns. We'll get into a discussion on this tomorrow, okay? All right. Now, do we have any questions before I move on to the next segment?
Yeah, there were several questions that came up here. And Roger, let's see here. So we talked about the charm chart. Yeah, one question that came up, it came up earlier in the presentation. Yeah, I'm going to ask it anyway. The question here was, so Roger, when there's a divergence, just generally speaking, when there is a divergence in the market, what should we expect to happen? A reversion back to mean?
Are we talking about what divergence in what? What are we talking about?
Yeah, that's a fair question. There were several I think when you were talking about the charts, maybe you were talking about the Vold, you were talking about the SPY, you were talking about divergence at that point in time. And the question was, is there an expectation is what's going to happen when you see a divergence?
Well, specifically when there's a divergence between the Vold and the SPY, the divergence resolves itself in the favor of the Vold, not the SPY. That's what I was saying.
Exactly. The SPY is going to catch up. So
Yes.
you expect that they're going to come together. There were some questions.
And
I think we
Dana, I
moved.
answered your question already 3 times in the last 24 hours. Just FYI, at least 3 times I answered that question in the last 24 hours.
Yeah. So, and that was just it. And you were very specific here. The confirmation signals, these can be universally applied. What you're sharing with us today is how to apply them on small caps using 1-minute charts.
That's right.
But these are universal and can be applied across the board.
Yes, absolutely. On any time frame, on any asset, whatever you're trading, whatever your resistance, whatever you use for your resistance level.
All right.
Yeah. Any other questions?
Nope.
Okay. All right.
And I have posted, Roger, and I'm going to do it one more time for people that want to have another chance to absorb this. It is going to be available to replay in your Telegram channel, in your YouTube channel. So if you go to the VIP Trade Room on the YouTube channel, you will see that today. You'll see yesterday's and just watch it and rewatch it. Take your own notes, draw your own lines on the charts, things of this nature. We're going to formalize this a little bit and down the road. But
yes,
once again, I think your videos do a wonderful job of explaining things. Folks, the thing is this, everybody has been asking Roger, I see you draw these support and resistant lines every day on your charts. And the question was, what do I do with them? How, I've got the lines. What does that mean? And you just shared exactly how you treat them.
So Dana, I'm going to answer this again, okay? Let's say you trade the SPY or E-mini S&Ps, you day trade. You can use what I just taught you for that. Let's say you're a position trader and you trade daily or weekly charts on the Dow Jones. You could use it for that. Any resistance line can be used for what I was showing you, any asset and any time frame. I just showed you basic confirmation based on looking at thousands of charts, how to confirm a signal to make sure that it's a high probability signal. You could use it on daily, intraday, stocks, crypto, penny stocks, Dow stocks, futures, corn contracts. You could use it on anything you want and any time frame you want. All right? Just FYI.
Yeah. And, as David said here, practice, then try it. I mean, we're in a holiday period now, guys. There's nothing wrong. I mean, you could test yourself. You could take a chart, go back in time, and then go bar by bar and start to identify the patterns for yourself.
Yes.
Draw the lines, have fun with it. It will become obvious to you. And the thing is this, Roger, I mentioned this yesterday because it dawned on me. We've all experienced everything that you just drew. We just didn't have it all nicely consolidated for us and recognize that these are patterns.
Yes, absolutely. These are patterns, and these are things that and remember, I'm going to explain all of this to you in great detail when we have a class. Okay. Mm-hmm. So and those, I'm pretty good at explaining things. Last I've heard, so I will explain all this to you. But I wanted to wait for more people to get into the program, so that so that we can do that. By the way, there's nothing happening in the market right now. The last 20 minutes, we're like 1, 2, 3, 4, 5, 6, 7, 8. 9. The last 40 minutes, we're just, I mean, we're like dead. I mean,
Flat as a pancake, I think you use that term.
Look at this.
Yeah.
We're above the VWAP, which is good, but I mean, this is like dead. Matt is being very optimistic. Matt thinks we're going to get above this level. I don't know if we have the I don't know if we have the
chutzpah.
Yeah, I don't know. I don't know if, not because of price action, simply because of lack of volatility. You know what I mean?
Yeah.
Yeah. All right. So, folks, if you missed the High Flyers class, I'm going to do it for you live right now. Live. This is going to be very exciting. I'm very happy to do this for you. And I want to make sure